Happening now, it's been a roller coaster of a week on Wall Street, with the company GameStop seeing its stock skyrocket. It's all after a large group of investors bought their stock to try to drive up the price after hedge funds and other financial institutions were betting on those prices going down. Fox Carolina's Zach Prelutsky spoke with a financial expert to help break it all down for us.
So, Zach, they also have a warning for people who are thinking about cashing in on this phenomenon.
Yeah, well, this phenomenon, Cody and Tori, all started with GameStop stock, which began the month at just under $18 a share, but has since risen more than 2,000% at one point. It's all because, as you mentioned, a large amount of individual investors bought the stock after financial institutions said they were planning on shorting it or betting that the prices would go down. Now, I did speak to a financial advisor today who says he's encouraged to see more people taking an interest in the stock market, but also wants people to be cautious before they spend their money.
I've never seen anything like that during my 11 years doing this, like what we're seeing right now with GameStop and the other companies like that, where the stock prices have gone from a low level to such a high level in such a quick period of time.
It's been a wild week on Wall Street, with companies like GameStop seeing their stocks rise exponentially. It's all after a group of day traders, first organized on Reddit, began buying stock in the company after hedge funds announced they were shorting the stock.
Literally, billions and billions of dollars have been spent and wiped out from these hedge fund managers and institutional investors.
To short a stock means to borrow someone else's stock to sell with the hope the price drops after it's sold. Investors then buy back the stock at a new price, usually lower, to give back and pocket the difference. But that's not what's happening in this case. Senior wealth advisor at Pinnacle Wealth Management, Micah Valentine, says whenever something drastic occurs in the market, like what is happening, it could lead to rule changes.
Whenever something like this happens, it is a cause for review, which we've seen a lot within the media right now. Is there's a lot of talk, and a lot of the institutions are reviewing procedures, because this potentially, something like this can really hurt the individual investor quite a bit.
If you're interested on getting in on the action on Wall Street now, though, Valentine suggests seeking out advice first.
I can't stress enough is to make sure you understand what the risk is with investing in anything out there.
Now, just another development in this saga. Earlier today, Robinhood, that's a stock trading and investment app, actually suspended people from being able to buy stock for GameStop and a few other companies. Now, later in the day, the New York Attorney General's office actually did say they are reviewing concerns after a flood of complaints about the move came in. For now, reporting live in Greenville, Zach Prelutsky, Fox Carolina, the 10 o'clock news.
Local Congressman Jeff Duncan weighed in on the situation. He says in part, quote, "We are witnessing a modern-day David versus Goliath story. All the American people want is fairness, from the little guy all the way up to the large corporations. They want to know the system isn't rigged against them and that rich Wall Street types play by the same set of rules as the rest of us. But the actions by certain financial institutions like Robinhood prove otherwise. The wealthy and well-connected get cover at the expense of everyday Americans making individual decisions in the market. This is Wall Street collusion at its worst, and we need answers from the SEC immediately."